friends, welcome. Let's look at the weekly update this time. So there are four important updates that we wanted to talk about. Let's begin with the most important one, which is impacting markets globally. The downfall of Silicon Valley Bank, SVB. What has led to this downfall in the Silicon Valley Bank? Silicon Valley Bank has about little over $125 billion of deposits. Bulk of these deposits came in the year 2020-21 when interest rates in US were significantly lower, mostly around 0%. That influx of hot money was there, and the bank decided to lend it out to illiquid mortgage-backed securities at the longer end. Now, the interest rates in US are going up. The value of those money which has been lent as MBS or mortgage-backed securities is falling. That is leading to some withdrawal of deposits from the bank, leading to the liquidity crisis, and it can have deep-rooted repercussions globally across financial markets. Moving on, the second big news is on Silvergate Capital. Silvergate Capital has raised concerns about the going concept. What has led to this downfall? Their share prices are down by 35% in the last few days. From beginning 1st of March, it is down by little over 50-60%. FTX exchange, which is a crypto-focused exchange, is going downhill because of the massive losses. They were the single largest customer for Silvergate Capital, and that is also leading to this downfall of Silvergate Capital. Moving on, Indian bond yields are very flat. The one-year treasury bill yield is approximately 7.45, where the 10-year bond yield is 7.5. There is hardly any term difference between the 1 year and the 10-year. What is the reason? The reason could be two reasons. Number one, there has been hiking interest rates by RBI, and that is pushing up the yields at the shorter end. But why hasn't the long yields gone up yet? The reason the long yields haven't gone up yet, because possibly the market participants are believing that the inflation is going to come off sooner than later, and hence the reasons for rate hike might not be there for pushing up the interest rates further going ahead. Hence the long bond yields haven't gone up yet, but that's a risk. A flatter yield curve is a risk for duration bonds, so most of the investors are sticking their money at the shorter end of the curve. And finally, before we sign off, March 22nd, the Federal Reserve will announce the outcome of the next rate action. Whether it's a 50 basis point rate hike or lower or higher, we will get to know on that day. On that note, signing off this week, all the very best. See you same time next week. All the best. Bye-bye.